Hi traders, this is TradeAlerter from ForexSignals.com for the Wednesday 27th of August 2014. Thank you for joining me again today. What we're going to be looking at today is a few of the commodity currencies starting to show signs of strength. The Australian dollar, the dollar CAD, and New Zealand dollar. And up in front of us right now, we do have the New Zealand dollar. This morning we had some news out regarding partnership between China, one of the big Chinese firms, and Fonterra, which is a New Zealand or giant dairy firm in New Zealand. Now they're going to be partnering. Now there was a little bit of concern that the announcement would have been something along the lines of a price cut, or expectations, because they did do that last time Fonterra had an announcement. But when it came out, it was a partnership to supply China. Then the market did react, and we did break a little bit of the downtrend resistance, and so the short covering has started. In terms of how much we can get from this pair, because it has fallen so far, and it's a much more neutral footing than it was beforehand, we'll probably be looking at pull back towards the 85 level, but there's also a few levels that are important above 84. So if we're looking at 84.20, so sort of this level up here, if we were to break that, that can give another legs. If the market fails there, then in this sort of price action, it's good to take profit here. Otherwise, you can see there's natural resistance up the top there, around about 85, and that's really where you should be not trying to fight the US dollar strength as much. Now, if this does happen, you are going to see probably the Aussie dollar move as well, and the dollar CAD. Now, dollar CAD at the moment is actually outpacing most of the other pairs. And the reason why is that it's got some big news supporting as well. So you can see the market react as soon as possible to a little bit of strong news to start this short squeeze, because US dollar's been so strong. So if you get this good news in, say, the pound or the euro, you can expect similar sort of reactions. So what we've had is Burger King merger and acquisition of Tim Horton over in the US, and Canada to merger and acquisition. So this is going to, around about 11 billion, they say, but it's enough to start breaking the trend, the uptrend there for the dollar CAD. So far we've moved back below 109, and really we should see the Aussie move with it. But because the dollar CAD hasn't moved that much, and New Zealand dollar has moved so much more, one way of playing this sort of short covering rally is to try and play the difference between the two. Okay, so this is the New Zealand dollar CAD cross. Now, if you play crosses only when you see there's a little bit of an imbalance. Yeah, and so this one here is you expect New Zealand dollar rally to make it to 85, whereas the dollar CAD may only get to 106, 108.60 or 108. So relative movement's a lot larger. Yeah, for the New Zealand dollar in terms of where we'd be. So back towards normalcy, which would be back towards this 92. So I've entered a couple of these trades. At the moment, New Zealand dollar is not as fast as the CAD, so it's a little underwater. Nothing dramatic. Yesterday we were talking about the potential for the pound to start a short covering rally. Now it's had a couple of attempts here, but it did fail, and so closed out the long that we had, the extra long, and I did close it this morning. So I closed it out just for small profit. And I saw this morning that the market was tested the same level. I believe it's around the 35 level, and since we found support here, we have seen the market sharply rally into Europe, and we could see another attempt at a short covering rally. There is talk of very strong selling 166 though, so we'd have to get past that, and so to probably take a proper news story. And if you're looking at a proper news story, then you're probably looking at the relative yields there that's going on between the UK and the US and Europe. At the moment, Europe yields are going down a lot. There's a bond yield, whereas the yields in the US, they haven't really started to rally as you'd expect on some of the data we've seen lately. All right, so what you have seen is that the spread between the yields, so this is if you're looking at, say, the 10-year, there's been a rally, there's been a change in the spreads in the favor of the pound against the euro and the US dollar in the recent weeks. So that usually would have supported the pound. So it's a little bit odd that the market's not focused on that. I mean, there has been, in general, a pretty strong US dollar rally, but you would expect that if that was to continue, that the US yields did not rally, and the UK yields remain strong, that you probably see this pound start to form a base and maybe go into range trading. Range trading we can deal with. Yeah, so we've got a bit of a problem here with a big floating loss from 169. But with range trading, you can sort of define the levels you want to buy and sell, and you can make some pips over time. And you're sort of forced to be watching the pound when you're in win and loss. So we will be trading the pound going forward in the future. I'm still looking for that safe level to buy that dip. So far we haven't seen that yet. But if we do break 166, hold above, get some sort of good news, then that's when I'll really be looking to be a bit more aggressive in the longs. Okay, in terms of what else we have on the cards, Euro Swiss, we bought some Euro Swiss down at 120.70 the other day, and then the market rallied up to 120.90 last night. The Ukraine and the Gaza stories are sort of settling down, so you know you can no longer expect the Euro Swiss to be going down on that, but it is going down anyway. So this is more of a positional squeeze. This is the pain trade we've been talking about. Okay, but this sort of pain trade probably has targets. Whoever's behind it probably has targets, and if we hit those targets, which may be 160, 120.60 or 120, 50, then you expect that a more normal balance of this pair going forward would ease it up towards 121 or 120, 150. All right, so we're still looking for support to be found. I've got some more buy orders here, 120.65. All right, it is starting to get a bit of attention. The more attention it gets, the more likely the S&B will say something. They don't have to say much, and a lot of those what we call weak shorts will be closing out. Okay, so tonight there isn't any data, so we'll be playing the price action we see. The euro seems to have found a little bit of support towards that 150, and it's attempting to once again rally. It hasn't been successful in the last few weeks, rallying for multiple sessions. So let's just see if we can get back, I say, above 132. Definitely 132, 10, 20. That's where you think that some of these sellers, which are many, have started to put their trailing stops. So trailing stops will be starting to come in probably around here, and allows a little bit of a normal adjustment back up. Wouldn't be at all surprising to see a move back towards 133, 130, 134. It is a big week coming up next week with the ECB. People are expecting talk about quantitative easing. Now, if they disappoint, then that's another area where you're going to probably see the market take it as a reason to short cover. It doesn't need much at these levels. All right, so good luck with your trading today. If you have any questions, please come into the trading room. You'll find me there most nights, and you can ask me anything you like there about the markets. Thank you.